Give me a thumbs up for these little puppies, guys. Say hi. Say hi, cuties. What's going on, guys? It's Investing Hustler here, and today I'm going to be talking about 4 pot stocks. That's going to be Canopy, Aurora, Kronos, and Tilray. So I found a pretty interesting article on these companies, which is which pot stock, Aurora, Canopy, Kronos, or Tilray has the most upside. But before we get into this article, I'm going to be doing my own analysis on them. I'm going to check them out. I'm going to let you guys know what I think is the company with the most potential upside. But before we get this video started, I want to ask you guys to please give me a like. It really helps my channel. Let's try to get this video to 100 likes. So the first company I want to talk about is Canopy. So just by looking at these charts, Canopy has been trading sideways all year. We've seen them trade in between this support line, which is at around $60, and this resistance line, which is at around $65. We've seen them go over it a couple times and immediately get rejected. If you look at Canopy's 1-year charts, you could see that they've been uptrending. So they've been consistently uptrending on the support line. You've seen them hit this support 1, 2, 3, 4, 5 times. Another thing I want to keep in mind is Canopy has previous all-time highs of $75. So I feel like it does have potential to reach these highs again, even though, and I quote, past performance is no guarantee of future results. That is true, but I do see Canopy beating their previous all-time highs sometime in the near future. But we're going to take a look at Canopy real quick. Right now, technical analysis for Canopy is a sell, sell, and a buy. We're going to look at the 1 minute, a sell, and a strong sell. Canopy is currently up 0.12%, so not too much movement today, and they have a market cap of $20 billion. So this is the largest cap out of all the 4 companies. Price to sales 260, price to revenue 131, total assets 8.64 billion. Total debt $691 billion. So on paper, of course, Canopy does look overvalued, but you guys are going to realize that all these companies that we're going to be looking at today, they all look overvalued. Let's take a look at Canopy's financials. So for the last quarter of December 31st, 2018, Canopy had a gross profit of $12,452,000. Operating income or loss of negative $152 million. Their net income from continuing operations was $74 million. So their net income was $67,582,000. I want to look at their balance sheet real quick. Total assets for Canopy, $8.6 billion. And current total assets for Canopy is $5.2 billion. But I do think Canopy is a little overvalued. Of course, they do have a lot of money to back them up, and this is a growing industry. But a market cap of $20 billion with a price to revenue and price to sales at 260 and price to revenue at 131, that is a little high in my books. But we're going to move on to the next company, which is going to be Aurora Cannabis. Now, I am going to be looking at these companies in Canadian dollars. I don't really want to have to keep switching back from Canadian to American because this probably will be a long video already on its own. So let's look at Aurora Cannabis. Right now, Aurora Cannabis is trading at $12.26. And as you can see right here, they've been bouncing in between this support and this resistance line right here. We even have a support right here in the middle. It was previously acting as a support, then acting as a resistance. And right now, we kind of see it acting as a support. Aurora bounced off this line and is continuing to uptrend, hopefully reaching the $14 mark soon, which is currently acting as a resistance line. And if we do break past resistance, I could see Aurora heading to new all-time highs again. Of course, we still have another resistance line here at $15, which we've hit that resistance line 1 and 2 times, and we did reach all-time highs of above $16, immediately followed by a huge decline. Looking at Aurora Cannabis right now, technical analysis says it's a buy, and a strong buy. 1 minute says it's a sell, and a strong sell. Right now, we are in the top half of our 52-week range, so we do have a lot more room for downside versus upside. Aurora Cannabis currently has a market cap of $12.3 billion. And the one thing about Aurora Cannabis is the 998 million shares outstanding versus Canopy Growth that I think has a little over 300 million shares outstanding. Aurora Cannabis has a price to sales of 226, price to revenue of 105, and a price to book of 4.5. So Aurora Cannabis price to revenue is 105. Comparing that to Canopy's 131, Aurora has the better numbers. Price to book is 4.5. Comparing that to Canopy's 10.1, Aurora has the better number. Price to sales is at 226 compared to Canopy's 260. Aurora does look to have the better numbers, smaller market cap. The only thing it has more shares outstanding. Both companies overvalued in my books. It still doesn't mean that Aurora Cannabis won't keep pushing forward. Another thing to mention is Canopy Growth does have a deal, and Aurora Cannabis doesn't. So that potentially could give Aurora Cannabis the advantage. Not only does it have better numbers, but it also doesn't have a deal yet. So if or when Aurora Cannabis gets a deal, we could see Aurora Cannabis market cap possibly double to 24 billion. Sorry. Let's take a look at Aurora Cannabis's numbers. So gross profit was $32 million compared to Canopy Growth's $12 million. Operating income or loss, negative $74 million compared to Canopy Growth's negative $152 million. Net income for continuing ops, Canopy was at negative $54 million. Aurora Cannabis was at negative $239 million. We're going to look at their balance sheet. Total assets, $4.8 billion. Total liabilities, $575 million. So of course, Canopy has more assets and more liabilities, but let's keep in mind, Aurora Cannabis has not landed a major deal yet. Of course, if or when they get more cash, their total assets will increase. But let's move on to the next company, which will be Kronos. Now, out of the four companies, I do believe Kron is the most overvalued company. Had a huge run, especially after that Altria deal. And right now we have Kron. I made a video yesterday on Kron, and I talked about a support line. I actually made this video last night, and I said that Kron had a support at around $26. So I talked about Kronos that yesterday, and I was talking about this $26 support line. So Kron currently has a market cap of $4.89 billion. Comparing that to Aurora Cannabis' $12 billion market cap, and comparing that to Canopy Growth's $20 billion market cap, price to revenue for Kron is 417. Aurora Cannabis price to revenue is 105. Canopy Growth's is 131. So Kron by far is the most overvalued. Price to book is 47.31. When you compare that to Aurora Cannabis 4.5 and Canopy Growth 10.1, Kron is obviously the most overvalued. Price to sales 1,197. And of course, comparing that to Aurora Cannabis 226, Canopy Growth 260, Kron is by far the most overvalued company of the three so far. I'm not even going to bother looking at Kron's financials and balance sheet, because from just by looking at these numbers, Kron is by far the most overvalued company. We've seen Kron reach an all-time high of $32.50, currently sitting at $26.40. They're obviously in the top half of their 52-week range. I feel like there's a lot more room for downside, but the main reason why Kron has had such a nice run was because the Altria deal. So far out of the three companies, I do think Kron is the most overvalued. And right now, Aurora Cannabis seems to be the most undervalued. But let's keep in mind, Kron has a deal, Canopy Growth has a deal, Aurora Cannabis does not have a deal. So let's move on to the next company, which is Tilray. And I'm surprised that we don't see Afria in this list. So right here we have Tilray. Tilray seems to have a nice little support at around $68. And the thing with Tilray is we've seen Tilray reach all-time highs of $300. So right now, when you look at the 52-week range, it does seem to be closer to the bottom of its 52-week range. Let's keep in mind, during these times when Tilray reached these all-time highs of $300, was all based on hype of marijuana becoming legal in Canada. Looking at these charts, Tilray does seem to be in the bottom of the 52-week range, closer to the bottom, does seem to have more room for upside, but it does not mean that this company is the best valued. We're going to take a look at them right now. So Tilray has a market cap of $6.3 billion. So it's a bit larger than Kron, which is at $4.9 million. Half the size of Canopy, Aurora, which is at $12 billion. And a third of Canopy, less than a third of Canopy, which is at 20 or 22 billion. So price to revenue for Tilray is 146. Comparing that to Kron's 417, Aurora Cannabis 105, and Canopy Growth 131. It seems that Canopy Growth and Aurora Cannabis have a better price to revenue than Tilray. Price to book is at 31. So comparing that to Kron's 473, Aurora Cannabis 4.5, Canopy Growth's 10.1, they seem to be the second most overvalued right now. Price to sales is at 146, which compared to Canopy Growth's 260, Aurora Cannabis 226, and Kron's 1,197. Tilray seems to be at the bottom there. So they're the better value when it comes to price to sales. Just by looking at these numbers, Aurora Cannabis does seem to be the better value, except for the price to sales. Tilray seems to have the better price to sales of the four. And Kron is by far the most overvalued company out of the four companies. Looking at these charts, Tilray does look like they seem to have the most room for upside. Keep in mind that Tilray, and Canopy Growth all have locked in deals, and Aurora Cannabis has not locked in a deal. I would call this a close race between Aurora Cannabis and Tilray, which I find weird to say Tilray would be the better deal out of the four, because I do think Tilray is still slightly overvalued, and people might think Tilray is very overvalued when you look at the $67 per share price range. But let's keep in mind, Tilray only has 93 million shares outstanding. We know Aurora Cannabis has 998 million shares outstanding. Canopy Growth has over 300 million, but let's look at Cron real quick. Cron has 178 million shares outstanding, and I want to get the exact number for Canopy. Canopy Growth has 334 million shares outstanding. So out of all the four companies, Tilray has the least amount of shares outstanding, which is the reason why it has such a high share price. So people might see $60, $70 a share and think that's expensive, but the only reason why it's that high is because it has a small amount of shares outstanding. So if Tilray had 1 billion shares outstanding, their share price would probably be at around $5 to $6. I would say right now, which is a surprise, and it's probably because Tilray stock did get beat up. I do think out of the four, it's going to be between Aurora Cannabis and Tilray. I'm going to give the edge to Aurora Cannabis, but that's only because Aurora Cannabis has not locked in a deal. So I'm giving Aurora Cannabis the edge because they have a potential to make a deal, which gives them the potential to more than double in share price. So if Aurora Cannabis makes a deal, I see them going above $20, $22. But with no deal, I could see them probably reaching new all-time highs again within the end of the year to $16, $17 without a deal. With a deal, I could see them going to $20, $22. That took a lot of time. Let's just go straight to this article, which is which pot stock, Aurora, Canopy, Kronos, or Tilray, has the most upside. So the legal cannabis industry is budding before our eyes, and investors have clearly taken notice. Though estimates vary wildly, a handful of Wall Street investment banks are counting on the global weed industry to crank out sales of 50 billion to 75 billion a year by the end of the next decade. With so much revenue to go around, there are bound to be some very big long-term winners in this space. The question is, of course, is what stocks those winners will be. So according to market caps, investors seem to believe Canopy Growth, Aurora Cannabis, Tilray, and Kronos represent the best way to play the cannabis industry. There are also companies that have done a good job of landing brand name partners or pushing into overseas markets, which is Canopy Growth closed a $4 billion equity investment from Constellation Brands. Kronos Group closed a $1.8 billion equity investment from Altria, and Tilray secured partnerships with Novartis generic drug subsidiary Sandoz, InBev, ticker symbol BUD, in December. Even though Aurora hasn't yet landed a major partner, its presence in 24 total countries is unmatched by its peers. So among brand name marijuana stocks, Kronos Group is certainly not a Wall Street favorite, nor a company yours truly favors. Either based on existing price targets, Kronos Group is projected by Wall Street to have 45% downside, which is probably why it's one of the only marijuana stocks to have two underperform ratings. And I agree with this 100% because out of the four companies, Kronos seemed to be the most overvalued company. So next one, it's not this top tier grower either. Despite hiring billionaire fund manager Nelson Peltz as strategic advisor earlier this month, it's not Aurora Cannabis either. According to Wall Street, Aurora's gains are capped out at about 8% from its current share price. Obviously, Aurora does have a lot working in its favor, including industry-leading production when it's at full capacity. The company has conservatively called for more than 500,000 kilos of annual run rate production by mid-2020, but I believe it's closer to 700,000 kilos by the end of 2021. They said it's not Aurora Cannabis, but I don't think they're considering the fact that Aurora Cannabis could land a deal and it could pretty much double their share price. Wall Street also believes it won't be the second largest grower, Canopy Growth, even though it has doubled the upside of Aurora at 16%. Based on its current market cap, Canopy Growth has 10 cultivation facilities that span 5.6 million aggregate square feet with over 4.3 million square feet licensed by Health Canada as of mid-February. Like Kronos, Canopy Growth is also flush with cash following the closure of its equity investment. Canopy has nearly $3.7 billion in cash and cash equivalents at the end of calendar year 2018. However, Canopy's growth obsession with reinvesting back into its business, building up its recreational brands, and expanding its product offerings will ensure it remains unprofitable through fiscal 2020. It might be one of the only pot stocks to be unprofitable next year, which is a big red flag against what otherwise a well thought out strategy. And the winner is, according to Wall Street, Tilray offers the most upside by a long shot. Among these popular pot stocks, though estimates vary, the consensus is that Tilray has 62% upside from its current market cap. Why Tilray? Chances are it's the company focused on medical marijuana patients, something Aurora is also doing, as well as its brand name partnership. Medical pot patients are often far more willing than recreational users to purchase alternative cannabis products, such as oils and sublingual sprays. Alternative products have considerably higher price points than dried cannabis flower, making them a higher margin and more lucrative product for pot stocks like Tilray. So the downside, though, is that Tilray is losing money hand over fist. The company's fourth quarter and full year results featured a full year operating loss of $57.7 million, a net loss of $67.7 million, and the fourth quarter kilogram equivalent sales of meager 2,053 kilograms. None of these figures are particularly cheerworthy for a pot stock with a $7 billion market cap. While Wall Street prefers Tilray, yours truly believes you should still think small if you want to prosper with pot stocks. What do you guys think? Let me know. Who do you think, which company do you think has the most potential for upside? Whether it's Canopy Growth or Cannabis, Cronos, or Tilray, I'm pretty sure I'm going to know what your answers are. Either way, let me know in the comment section. If you guys enjoyed this video, don't forget to leave me a thumbs up. And if you're not subscribed, don't forget to hit that notification bell, smash that subscribe button. I'll see you guys on my next video. Bye-bye.